All right, have I got a wild one for you today. We're diving into this company, BMNR. That's just a complete financial puzzle. An analyst took one look at it and, well, the story they uncovered is something else. So let's get right into it. So here's the core of the problem, the big puzzle. You've got this company, and it's supposedly worth $14 billion, but it sells almost nothing. Right away, your spidey senses start tingling. Something just doesn't add up here. I mean, how is that even possible? How can a company be worth $14 billion when it only brings in $6 million in revenue? The math is just broken. And that's exactly what one analyst set out to figure out. Okay, just look at these numbers side by side. It's almost comical. On one hand, a measly $6 million in sales over 3 whole years. And on the other, a market cap that's the total value of the company of $14 billion. This huge gap is the first major clue. It tells us that whatever is going on with BMNR, it has absolutely nothing to do with its actual business operations. So if the value isn't coming from sales, where is it coming from? Well, the analyst knew exactly where to look next: the balance sheet. You can think of a balance sheet as kind of like a company's financial diary. It lists out everything it owns and everything it owes. And this is where things started to get really interesting. And boom, the first thing you see is just a massive pile of cash. We're talking $1 billion, just sitting in the bank. For a company with almost no sales, that's an insane amount of money. It's a huge war chest. So right away, we know this company is absolutely loaded. And get this. On top of all that cash, they have zero debt. None. Zilch. So you have $1 billion in cash and owe nobody anything. I mean, on paper, this company looks like a fortress, completely unshakable. But then the analyst finds the real treasure, the crown jewel. It turns out BMNR is sitting on almost 4 million Ethereum coins. At today's prices, that's worth well over $11 billion. And there it is. That's the source of the valuation. Mystery solved, right? Well, not so fast. It became pretty clear that BMNR isn't a normal company at all. It doesn't really do anything. It's basically just a massive crypto fund that you can buy shares of on the stock market. Its entire fate, its entire value is completely tied to the price of one thing: Ethereum. Okay, so this sounds pretty great, right? A company with a boatload of Ethereum. But here's where the story takes a massive plot twist. The analysts started asking the real question. Wait a minute, if they only made $6 million, where on earth did they get the billions of dollars to buy all that crypto? And folks, the answer to that question changes the entire game. They didn't earn it. They didn't borrow it. It turns out BNMR just printed its own money. They paid for all that Ethereum by creating new shares of their own stock out of thin air. And I'm not talking about a few shares. We are talking about a mind-blowing amount. Check this out. 2 years ago, there were 2.5 million shares in existence. Today, there are over 400 million. That's a 160x increase. For any investor, that should set off every alarm bell you have. This whole magic trick has a name. It's called share dilution, and it's a super important concept to understand. Basically, when a company just keeps printing more and more shares, your own piece of the pie, your single share, gets smaller and smaller and smaller. Let's use a pizza analogy because it makes it super simple. Imagine the whole company is a pizza. Now, let's say the value of their Ethereum goes up, so the pizza gets bigger. Awesome, right? But here's the catch. The company keeps taking that bigger pizza and cutting it into more and more and more tiny slices. So even though the whole pizza is bigger, the slice that you own is actually getting smaller. And that is precisely what's happening to anyone who owns a share of BMNR. The analysts put it perfectly in their report. They basically said, look, the company's total value can shoot to the moon if Ethereum rallies, but that doesn't mean the price of the one share you own is going to go up with it. All that growth, it's not actually making it to the pockets of the individual shareholders. So where does that leave you as a potential investor? Well, you're stuck in this crazy tug of war. On one side, you've got this incredible potential for growth, but on the other, you've got this invisible force just constantly pulling you back down. Let's break it down. The upside is obvious, a massive stash of Ethereum that could absolutely skyrocket in value. But the hidden risk, this nonstop, relentless share dilution that's basically designed to eat away at any gains you might make. It's a constant battle. So what did the analysts conclude in the end? Is this a buy or not?
Well, it all boiled down to two huge, unavoidable risks. Okay, risk number one is that dilution we've been hammering on. It's so aggressive, it could literally pin the stock price to the ground forever, no matter what crypto does. And risk number two, massive market risk. BMNR is a one-trick pony. If Ethereum crashes, this company goes down with the ship. There's no other business, no plan B, no safety net whatsoever.
So when you put it all together, the analyst's conclusion was unavoidable, and it was crystal clear. BMNR is not an investment, not in the long-term sense. It's a pure gamble. It's a high-risk bet on the price of Ethereum, and that's it. You're not buying a piece of a business. You're just speculating. And this whole crazy story leaves us with a really powerful question that you should ask yourself before any investment. It's a huge reminder to always look under the hood. Because if you see a company whose total value is soaring, but the price of your individual share is going nowhere, you have to stop and ask, who is really making the money here?